All righty, traders. Hold on. Let me just post all the morning edge stuff in the chat rooms. Okay, so if you didn't just hear it, Meister's talking about asset purchases, considering interest rate rises at right here at appropriate time. This is what kind of goosed the market. Everybody's like, oh crap, you got every Fed governor out there right now. They are just talking about tapering. So this is, like I said, it's kind of goosed the dollar, and the dollar's breaking above resistance. So let's just keep that in mind as we are facing Powell's commentary here in 45 minutes. What I'm going to do is I'm going to buzz you through the analysis this morning and make sure that you guys are all set up with all the levels. Then I'm going to have to step away. I'll be done with this webinar. Steve's not going to be here today. He is on holiday. So you guys have to also imagine you have to consider yourself fortunate you've had him for a few days, because he has been on, like I said, he's been on vacation. And but today he had lunch with his friends at this point. So he just wanted to, he wanted to say sorry he couldn't be here today. And it's just us. All right. Okay. But so what we're going to do is we're going to go through all the charts. We're going to go through all the levels, and then I'm going to let you guys go. And then, before the report, because I got to step away from my desk, or for the report for Powell, I'm going to step away from my desk for a few minutes. I got to do some things around my house to be ready for Powell's speech, which means, basically I got to feed the dogs and feed the kids, make sure that the dogs go out so I don't have any accidents in the house, that type of thing. I've got to handle all that before Powell takes the podium. So let's go through the markets. I hope you guys understand. So Euro. So we just cracked through some support. Key support right now comes in at 117.25. Let's look at this. Matter of fact, since we know this is a 78% retracement and that 117.75 is good resistance. Okay. And support 117.25. But let's do this really quick. Let's remove, well, we don't have to remove that. Let's take this low to high. Grab this %38 retracement. That's in between fibs, right? So the 618 comes in at 117.07. So I'm going to write down, just in case we get down there today. Okay. All right. Just rounding that out a little bit. Sterling. All right. Oh, all right. All right. All right. So as you guys know, this is really key. I don't even care if we hit new highs here. Like if we break this little high, I don't care. That resistance is going to be critical. 137.90. Bears have to hold that if you're bearish. 37.90. Support. Yeah, so 136.80 is the 50% retracement. Well, 136.84, 136.80. And then below that would be obviously 136. So this is, you know what? See all those lows way back over here? It's also a 618 retracement. I'm going to write down 136.65. Okay. just in case we dip down there. I mean, I want you guys to be aware of these levels as we get close to them. Okay. Aussie, still bearish. Resistance, obviously 73 cents, but support here. $72. I'm going to write down 72.10. Resistance 73. That is key. That's got to hold to keep the bearish designation. Kiwi, nice little head and shoulder pattern developing. You guys see it? So 618 retracement is 69.80. And if we break that neckline at 69.30, that means the target becomes 69 or 68.70. So 68.70, 69.30. Got it? Head and shoulder pattern. Still range. I don't want to, get too aggressively short that. Dollar Canadian. It's trying. Looks pretty flaggy to me. So intraday support now is 126.40 on dips. And then below that is 125.80. So I'll write down both those areas. 125.80, 126.40. All right, 126.40 is right there. Resistance is 127.20, 128.08. So 127.20, 128.10. I'm not going to keep it in bullish. As you guys know, I flipped it back over to range for now. After today, it'd be, it could be a little different, but for now. All right. Swissy. Oh, look at that. What is the what's the resistance we've had on the Swissy every single day for the last 2 weeks? Right. 92 cents. So one of the things I was looking at last night, actually, I didn't put this on the analysis. This is after analysis, like it was in the evening, and I sat down from my computer for a few minutes. I'm like, man, that Kiwi's, the Swissy's, winding up. I'm like, I'm going to pay attention to this little downtrend line too. So we're going to write down 92 cents, but I'm also going to write down 92.25. Okay. We are going to keep in range, and remember 91 cents is really big support here. I think we're going to find support ahead of that personally. Maybe we would find support down here by the time we got there. 91.35. So 91.35. Excuse me 1 second, guys. $91.35. Dollar Norway. You know, it's interesting. I put my stops for the invalidation level for the pattern in play at 879, even though my stops personally are way below that because I'm, you know, you guys know, as I've been telling you for the last, you know, few months, I'm bullish as long as we're above 870. But, you know, putting in patterns in play, I've got to do it from a risk reward standpoint type of thing. Anyway, 879 has been really key support. If we break that, if we will go to 870, I'm sorry, that's what I wanted to write. 870, 879. That's support today. I do want to keep it in bullish, but it really hasn't performed very well. It hasn't. I don't know what's up with Norway right now, but it's just not acting too well down here. Again, I will reiterate, I think it's bullish while we're above this. It's bullish while we're above this resistance or the support, which is previous resistance. But it's still, I think it's more range bound than anything. You know, you buy it closer to 875, sell it, you know, above 9. I think we're going to be able to do that a lot. It's just right now, this week, it's really acted kind of poorly. So if we do get a break above 886, 87, you know, we might see 892 again. I'm going to stay bullish, but I'm don't feel as good about it today as I have felt, you know, in recent weeks. And I think that's probably just because equities remain at all-time highs. You know, it's probably just weighing on it a little bit. Dollar Mex looks good. Shoot, you know, we break this 2047 and let's see where we go. I mean, that targets these highs again. So I'll write down 2047. Above that takes us to 2074. 2047, 2074. Okay. We have to keep it in bullish. I mean, we've you know, popped out of this range and we're holding above this range. So while we're above 2015, you got to stay bullish. Okay. And it's acting really well. So dollar yen's probing, you know, next resistance is going to be 110.81. Support right now, bulls do not want to see it drop below here. We are obviously popping out of a, you know, what I feel is a triangle. Oh, shoot, I grabbed the wrong thing. Sometimes I just want to rip these things off. Okay, so it could be like that too. That's what I was trying to show you. Is like, you know, it's a consolidation and a break. So high to low. Fib extensions, should we start running? So 110.80 support 109.60. I think I have that reflected correctly. 109.78. Oh, because I didn't want it to drop below this support right here. But really, it's, you know, while we're above this lower trend line, should be 109.60. So because we came out of a triangle, resistance is at 110.80. Dollar index, we be trying. Resistance is going to be really critical for dollar bulls right up here, because this, remember, this is where we close the week, is at 93.40, and that prevents us from being a breakout or not, right? It's bears want to defend that. And I'm going to keep us in range right now because of that false breakout from last week. I'm going to keep us in range, but you know, bulls do not want to see below here, 92.80. And really quick, I'm going to ask you guys. Denise said, I've sworn off trading this pair, the dollar yen, but I really like your analysis. Thank you very much. You know what? I've as I've told people the last few months, actually, I do not have a good read on the dollar yen. I don't have a good read on it now. Usually when I get really bullish or really bearish the yen pairs, I can, you know, I feel it in my bones and I get pretty aggressive. Right now it's because, you know, and I'll just talk about this really quick, then I got to move on. The dollar yen is being pulled in so many different directions right now, you know, between yields, between risk aversion, risk appetite, between divergences of common, you know, correlations. I mean, it's made it very difficult to trade at this moment. There's always clarity in the markets. The markets show clarity at different stages. And I think the dollar yen will do that. It's just, you know, it's going to take a little time. Anyway, all right, I'm going to get to, and thank you, Denise. I appreciate that. Here's gold. Okay. So as you guys know, gold 200-day moving average is right there. And it's basically at these highs. So if you look at the date, here's the daily chart, 118.10. So I'm going to write that down. 1810. Damn it. 1810. Sorry, guys. I'm trying to bust through this. That is really key. And guess what was silver? Guess what is key? 24, right? Yeah. You guys already knew that though. So support right here is 1770, same as it ever was. 23 is key support, but while we're below 24, we have to remain bearish. The gold market, I would say, while we're below the 200-day moving average, you want to say you want to be bearish, right? But silver's really acted poorly. Gold can't climb above the 1810, that 200-day moving average, but we get above that. I mean, you have to think about that. We're clearing not only a 200-day moving average, we're clearing this trend line right here, right? Okay. A lot of resistance this week. So, you know, it could actually even turn us like near-term bullish. I'm going to keep us in range in gold, but anyway, Bitcoin, 200-day moving average, still holding. I'm going to write that 46, then 43.8. So 43,800, you guys know that. 46K is support. Resistance is at 50,500. And it's still bullish, and it's, you know, it's bullish really while we're above this 42,500 level. It's bullish, but you notice how we're just hanging above the 200-day moving average. I don't think I'd want to be short Bitcoin right now. Okay. S&P, last but not least. Definitely not least. Did I just skip over it? Where is it? Oh, there it is. Okay. So here's your S&P. And let me delete that for now. Okay. Intraday. Let's just mark that up. I mean, yesterday kind of stopped out some traders. So now we know that yesterday's low is pretty significant. So that comes in at 44.65 roughly. 44.65. Doesn't mean we're bearish. It just means that we're bullish. And the ascending trend line for this big old ass wedge right now comes in at roughly, by the time we got there, it would be 44.20. So I'm going to do this 44.20 asterisk, which means it's important. Oops, shoot. Oh, oops. Asterisk. Okay. It's bullish. 4,500. Right? 4,500. And should we break above 4,500, next resistance is going to be 4,550, just in case he's a super dove. Okay, guys. Anyway, your bias chart is finished. I've got to roll out of here. I've got to go take care of, like I have all my family stuff before Powell's speech in 20 minutes. I will see you guys in the chat rooms. Please be safe today. Today's not a bad day. Guys, if you've made good money this week, and let me just say this, if you've made good money this week, like, you were, trading, let's say you were short the dollar early this week and you made some good money. It's okay if you want to leave and take the day off. I do think that the market has a good chance of moving today, but when you get a good chance of moving, you also have a good chance of like being on the wrong side of the market. And there's nothing more satisfying to me than having a good week and just being done for the week. Like, hey, I don't care what happens today. I made great money this week. I'm avoiding what could be a pothole in my trading, a little tripwire, if you will. So just taking the day off and just kind of relaxing and enjoying the rest of the week. There's nothing wrong with that. So remember, very low liquidity today. Try not to fade, as I told you guys on the FACE webinar. Try not to fade any big moves that you see, because once the liquidity dries up, it might be more of a one-way market. Okay. All right, guys. Thanks, everybody. And have a great weekend. I'll see you in the chat rooms, or I'll see you. If not, remember, we do not have the daily roundup today. I've actually got a few people I've got to interview later this morning. Jim Welch. I'm actually talking to, who I'm talking to today? I'm talking to a gentleman by the name of George Perks. And he's a really, really, probably one of the better macro guys out there. He's younger. I think he's in his 30s. Really sharp guy. He writes some articles for Business Insider and some other places. And I've known him for years on, Twitter. And so we're going to talk today. I'm pretty excited if I can get him for some interviews, because I think he's going to open up a lot. So anyway, have a great one. And then I'll be talking to Dick Matthews. It's fun interviews to do. Anyway, have a great one. I'll see you guys a little bit later, and I'll see you in the chat rooms. And if not, best of luck to you. Thank you, everybody. Have a great one. Bye-bye.